Welcome to our business analytics presentation, where we'll be looking at the way in which the banking industry uses data, transforming the business into a digital business structure, what this entails, and the new challenges and ethical issues faced by businesses whose use of data informs their day-to-day operations.
Before we proceed, it's important to note that our focus will not be based on technological advancements in general, but rather banking's use of data specifically. Similarly, we will attempt to underline only the ethical challenges of data use, collection, and storage, rather than discussing the broader ethics of the industry itself. So, a quick introduction to the industry. The banking industry refers to the network of banks that is licensed by the state to supply banking services, acting as an intermediary by taking in funds in the form of deposits for safekeeping, then in turn creating a profit by charging higher interest rates on the loans than the interest on savings. The use of data has been integral to the banking industry for a significant number of years, particularly for operational and transactional purposes. However, the use of data has only grown more extensive and sophisticated in recent times, with the use of artificial intelligence, machine learning, the rise of digital banking, and big data analytics. So in this presentation, we will explore the ways in which the banking industry uses data, how it has changed the way the industry operates, and the various ethical challenges that have arisen as a result.
Data analytics is used by banks to manage risk, improve customer satisfaction, and optimize operations. Risk management is one of the most important applications of data in the banking industry. Banks use data analytics to identify potential risks and make informed decisions about lending. Banks can identify patterns and trends in data that will help them reduce risk and prevent losses. For example, credit scoring models can assess a customer's creditworthiness and determine whether or not to approve a loan. In addition, they use data to monitor market conditions and identify potential risks to their investments. Customer profiling is another area where data is crucial. Banks collect information about the customer's behavior, preferences, and needs. They can create targeted marketing campaigns and personalized offerings by analyzing this data. This contributes to increased customer satisfaction and loyalty. Data analytics is also used to optimize operations in the banking industry. Banks may use data to forecast cash demand and optimize their ATM network. They also use data to improve call center performance and their customer service. Banks can identify areas for improvement in efficiency and cost reduction by analyzing data. Fraud detection is another important application of data in the banking industry. Machine learning algorithms are used by banks to detect and prevent fraudulent activity. Banks can detect patterns and anomalies that indicate fraudulent behavior by analyzing large amounts of data. This aids in the prevention of losses and the protection of customer data. The following articles provide valuable insights, suggesting that banks are increasingly adopting a data-driven approach to stay ahead of the competition and meet the changing needs of their customers. Furthermore, Joe Sesky discusses how the blurring of physical and digital spaces in retailing is impacting business model innovation. While the article does not directly discuss banks, the concepts presented can be applied to the banking industry as well. One key concept presented in the article is the importance of leveraging data to create new customer experiences and increase revenue. In the retail industry, this can involve using data to personalize recommendations, optimize pricing strategies, and improve supply chain management. Similarly, banks can leverage data to better understand their customers' needs and preferences, tailor products and services to individual customers, and improve risk management practices. Despite the numerous advantages of using data in the banking industry, there are some drawbacks. Data privacy and security are two major issues. Banks must ensure that data protection regulations are followed and that customer data is protected. They must also ensure their data is accurate and reliable in order to make sound decisions. Although the use of data in banking raises serious concerns about data privacy, security, and ethics, banks must ensure that data is collected and utilized ethically/openly, and that sensitive customer information is safeguarded against unauthorized access or breaches.
Data has changed the way the banking industry operates in many ways, from the products they sell to the way decisions are made and the strategies that they follow. In the past, banks relied heavily on manual processes and personal relationships to manage their operations. However, with the advent of new technologies, banks have been able to fully leverage the power of data to help improve efficiency, reduce costs, and improve customer service. One of the key ways that data has impacted the banking industry is through the development of new products and services. With data analytics, banks are able to gain an insight into their customers' needs and preferences, which enables the industry to develop more personalized and targeted products. For example, banks are now able to offer customized savings and investment plans based on their customers' financial goals and risk tolerance and investment horizon. Similarly, credit cards and loan products are now designed with specific segments of the market in mind, such as small business owners or young adults. And we can see this in practice, where banks like Capital One have a range of credit cards to appeal to specific audiences, from the Credit Builder card, designed for people simply trying to build their credit score, to their travel card, aimed at those who want to use a credit card overseas regularly without incurring extra large fees. And it's thanks to data that banks can efficiently design and market such products without having to worry about a lack of demand, as the data has already told those in charge exactly how their customer thinks and behaves. Data has also impacted the decision-making process within the banking industry. In the past, decisions were often based on anecdotal evidence or intuition. However, with the vast amount of data that's now available, banks can now make informed decisions based on empirical evidence. As mentioned, banks can use data externally to identify trends and patterns in customer behavior, which can inform decisions about marketing campaigns, product development, and risk management. However, additionally, data can be used internally to evaluate the performance of certain branches, helping decide if a branch is understaffed or, on the flip side, no longer worth keeping open. Data can also help to identify and mitigate fraud by using past data to detect future irregularities, which has for long been a significant concern for the banking industry. Finally, data has impacted the strategies that banks follow. With data analytics, banks are able to identify new opportunities and markets that may have been overlooked in the past, allowing for more diversified revenue streams and a wider appeal to the masses. Additionally, data can be used to optimize existing operations and reduce costs. For example, banks can use data to identify operational inefficiencies and bottlenecks, such as long wait times and slow processing times, and then take practical steps to address them. This can result in significant cost savings and improved customer satisfaction. To summarize, data has had a profound impact on the banking industry and revolutionized the way it operates. It has been a catalyst to the creation of new products and services, improved decision making, and more efficient operations. And as data continues to play an increasingly important role in the banking industry, we can expect to see even more innovation and transformation in the years to come.
Banks face a variety of ethical challenges regarding the collection, storage, and use of data, one of which is the struggle to maintain right social purpose and culture. This arises from the lack of goal congruence between the industry's targets and the industry's purpose. Simply, the banking industry's purpose is to empower and provide financial security to businesses and organizations by offering products and services that society needs, as well as connecting with people. This issue is further exacerbated by the ability of data and algorithms to exploit human biases. A lot of work done to tackle this challenge has been undertaken by regulators setting out guidelines for behavior, such as the ICAEW laying out key points of interest, such as the organizational culture, incentives, and profits with an aim to improve the overall culture and purpose of the bank. But it's ultimately been up to the banks themselves to adhere to these guidelines to cause positive change within the area. One solution is to take the approach of using data and algorithms pragmatically and purposefully, while also still valuing the experience that knowledgeable individuals like managers bring to the decision-making process. This way, data and algorithms are used as an assisting tool rather than the final decision maker. A huge element of connecting with society is being trusted by the people. In order to do this, banks in recent years have focused on being transparent by communicating what customer data is captured, stored, and processed, and for what reasons. Along a similar vein, there are also concerns for the external security of customer data, especially with the rise of open banking, where banks must provide a regulated third party with customers' data at the request of the customer. This poses a reputational risk for the bank, assuming things go wrong. Banks must therefore make it a priority to make the process of making data available safe and secure. Fortunately, open banking is made safe through the use of application programming interfaces, which provide a secure connection between third-party providers and customer accounts. These are only some of the ethical issues related to data that banks have to consider and deal with. In conclusion, the use of data has become almost transformational to the banking industry, becoming an integral part of the banking industry's continued success in the digital era. By using data analytics, banks can prevent fraud, improve operational efficiency, and gain insights into customer behavior and hence provide tailored products and services to meet the needs of the customer. However, it is important to highlight the huge effort that must be made in order to ensure that data collection, storage, and use of implemented policies, procedures, and ethical guidelines is responsible and truly ethical. keeping the customer's best interests at heart. This way, banks can meet their moral and legal obligation of handling customer data securely and ethically, while still benefiting from the use of data.
Thank you for listening to our presentation.